Good morning, traders and investors. Welcome to Monday's edition of Benzinga's Pre-Market Prep, brought to you by Options House. And another day of peace and quiet on the news desk. Joe's not coming back till tomorrow, so we got Brent sitting in for him. Brent, how you doing this morning?
I am good. Happy Monday, sir.
Yeah, daylight savings time. Getting you
Nice.
out of bed a little bit earlier, huh?
Yeah, a little darker in the morning, but now I can go play in the streets at 7:30 or 8 when I get home from work.
Do you still have to come in when the street lights go on?
My roommates get upset if I'm not checking in with them.
Okay, well, busy weekend here. Had some news coming out of Malaysia and that airliner. Is there
Holy cow.
any update on that?
I haven't heard too many updates. They're still searching for pieces of this plane.
So you're telling me that we have a potential war with Russia and a potential terrorist attack, and here we are down 2 points in the market, right?
Two lousy
Two
points.
lousy
That's right.
points. No fear in the market at all. S&Ps did have a pretty good range overnight. Did take out Friday's low, but we're right back up, huh, Dennis?
We're back. We're back. 1867.75 was the low. So we've had a tidy little 8.5 point rally off of the lows here. Yeah, I got up. I was looking at it early or late last night, actually. And we were trading down about 7 points here. Now only down two. So the buy the dippers, they're coming back into this market even at night now, Joel.
Yeah, it did. I mean, with all that news, you'd think they'd hit it a little bit Sunday night, and they did. We did get below that 1870 level. Really, the only thing that I want to alert our traders to on the upside is we've had two closes right in this area, right where we're trading right now. I had a close, the all-time high close on Friday at 1878, and then you had a Thursday close at 1876 and a quarter. So that is going to be the battleground right there to see if we can go higher, get back to that crazy high we made right after the number at 1887.50.
Yeah, and we got to remember that we were pulling back a little bit on some of the Momo stocks there the last couple of days. We still see this rotation happening a little bit from Momo to value. We saw the stock of Berkshire Hathaway taking off the last couple of days, continued the breakout on Friday. So I wonder if we're going to see that same thing happening again today here. It would be the third day in a row that they've been kind of selling a little bit of the Momo and buying the value.
Right. I wrote a little piece about Brick B on Friday, and that stock was a laggard for the second half of the year. Tanked with the market in January, but has come rolling back with a vengeance. Took out that 119.38 level, which was the former all-time high. Took that out. Boom. Traded up to 123 on Friday. Settled a little bit off it, but trading up again in the pre-market. So good to go north as long as we hold that critical 119.38 level.
We'll break into the individual components of Burke B just here in a little bit. We'll talk about some of the ones like IBM and American Express that have really been taken off as of late. Let's take a quick look just at the gold market here. It is pulling back just slightly this morning. Actually, it's trying to get back those losses there too, though. We've had an overnight low of 1330 on the March contract. We're now back up bid at 1339. So gold's got all its losses back too.
Yeah, that did had the fake out. We had like four lows in a row right at that 1331 level, and they did smash it through there on Friday. But it was one of those smashes where they took out the sell stops at the level and then brought it right back up above the support level. Now you're still just kind of trading in that range. Major resistance looming up there at the 1353.20, which was Friday's high up to the recent high of the move at 1355. But for now, gold still range bound.
And you got crude bounced off that big psychological $100 level a couple of days ago. Got as high overnight as 102.82. Has pulled back though. Now it's down $1.21 at 101.37. What's your thoughts here on crude?
I'd watched that out of the gate last night and couldn't take out the high from Friday, right near the 103, nice round number level. They've taken it straight down since then. We are trading through some of the lows that we made near the end of last week. Thursday's low, 101.57. We did take that out, traded down to 101.05. just spotty support down to Thursday's low, believe it or not, was at 100.13. So trying to rebound, I would use that low, that 101.05 is just a soft low there. Just no major number there as of right now.
The 3D companies not
Ooh.
getting some love in Barron's, Joel. What's holy cow? I'm looking at all three of the big guns, DDD, SSYS, XONE, all trading down pretty significantly this morning. Cover story of Barron's not liking them.
No, and I mean, well, first of all, you got to take into account that these stocks have had some incredible runs, and what they're saying now is that there's private companies out there that are producing similar products at smaller prices, and basically they're trying to call the top here in these stocks. They've already come off some of the highs, but first let's look at Triple D Systems. It's over the last 2 years, it's been up 370%, and now it's pulling back. And one of the things that I noticed was pretty interesting, and they talked about private companies producing the machines. That a couple industrial companies are using this, Ford and GE. GE has 34 printers, 3D printers, and guess how many are from Triple D?
How many?
One.
Ooh.
Yeah, there's some private companies that are entering it, squeezing the margins. I mean, these are a tough call. I know you've invested in this one, on a long-term basis here.
I did. I wasn't really a long-term basis. I bought it, and 3 days later, it went up 20%. And I was like, I make 20% in 3 days, even on an investment. Sometimes you got to ring the register, and I did actually. So I'm not in it, but I've kind of been licking my chops to get back. And I sold up around $69 from that 55 pop where I picked the bottom, basically. I don't know what I'm saying on this one. I'm looking at it, but now I'm getting scared with this Barron's. And like you said, we don't really know who's gonna, maybe you like 3D, maybe you like the whole technology, but we don't really know who the gun is gonna be, who the best in breed is going to be at the end of the day.
Right. Just looking at it from a technical perspective, they're taking this thing down pretty good. Triple D's trading down 2.5 points. Did hit 64.01 in the last bracket. Now, to me, the $65 level is going to be critical. Had a low on Friday just above that level at 65.63, and then also had another low at 64.80. We're trading right below there. So if it gets above 65, there's really nothing stopping it from going back up and perhaps testing the close. Now, below 65 here, man, there wasn't a lot of trading going on
No.
between 60 and 65, so that could be a scary area if you're looking, to get it out on the real cheap here. There's two lows. The low of the move was 54.63. Then you had another low at 60.25. So I think there'll be a lot of shorts. Would be happy to see that thing, trading back at the $60 level. I just don't think it has the momentum to get there today. The other two ones that they mentioned, SSYS. Now this one has been holding up. Did I get it right?
You
SSY.
got it. You always
Yeah, right.
transpose that one, but you got it right today, Joe. You're on top of things this Monday
Daylight
morning.
savings not messing me up. Here we go. SSYS seems to be holding up a little bit better overall than the other ones. I believe that had a recent all-time high above the 135 level, 138.10. Pulling back in the pre-market. Now, this pre-market chart looks a little dicey here. We just made a low in the pre-market at 111 even and 111.05, but not really getting a bounce. Looking at the dailies, the daily charts for this issue, you had several lows between 110.59 and 111.25. So this one is really opening up into more bona fide support than where the 3D is. And then below this 110 level, you can obviously see what the low of the move was. But 111 should be a good level for SSYS. The other one that they mentioned of the big three, XONE, the X1 company, that stock is trading down as well in the pre-market here.
It
Not
didn't really get the bounce when the Triple D did, and the SSYS. It's always been, since it's been selling off from the whole $70 high or $70 and a quarter that it made on January the 13th. then sold all the way off to $37 there in February. It really didn't get the bounce that the other ones did. It bounced 10 points, but the other ones were bouncing and getting, and approaching to where, their highs were. This one didn't. So I wonder if this action will be a little muted just because it seems like the volatility in this one's a little bit less than, well, at least less than the 3D systems.
And this one has a good support level to look at as well. The highs from the last two trading sessions, 43.03 and 43.09, haven't really traded much in the pre-market. So the fact that this didn't get as much bounce perhaps might cushion the blow a little bit on the downside. I'll be keeping a close eye on that $43 level.
Yeah, that's huge. 4303, 4309. We start taking that out. It's all air pretty much below to 40. But if we can hold that, then you have that potential for a double bottom in place. But like we've been saying, they've been moving out of the Momo, and these were all Momo stocks and into the value. So that's concerning here as well. Let's just quickly, you said a couple other ones in Barron's just to finish up the Barron's. You were also looking at a couple other stocks, and I'm
Right.
noticing in my filters here this morning, MetLife is trading up 60 cents right now, and I guess Barron's is bullish MetLife here as well.
Right. They gave a couple catalysts for this stock. It's trading at a low PE, good price to book ratio, has a global business. So this is just looking at it technically here. Trading up here in the pre-market, 65 cents. Not a lot of volume, a couple odd lots here. What we're going to be looking, boy, someone must have got the memo on the Barons here. Look what this did on Wednesday, Thursday, and Friday. This thing had
Straight up.
yeah, it's straight up. Taking out some major resistance here at 53.50. You had multiple tops in that area, as well as a high from Friday at 53.61. No resistance until you get over the $54 level, 54.22 and 54.40 were your highs back in mid-January. Now, the reason they think that MetLife has trailed some of these other insurance stocks is they have no buyback in place. So keep your eye on that Benzinga Pro news feed. If you see a buyback by Met, and they're not suggesting they're going to do it, but that could be the thing that might just really be the catalyst to really get this thing to break out. The major resistance that you have back, this thing started out much better at the beginning of the year. It was trading near the 54.70 level, so we'll keep an eye on that as well.
That 54 level is huge on this stock. It's littered with highs up there from late December and early January. So I got to think if they can pop this thing up another 50, 60 cents, that's going to run into that mound of resistance once again, especially because it's been on such a tear. I mean, this stock was 49 bucks 5, 6 days ago. Now it's really been on and run. And we've been saying some of the value stocks have been coming back into play. This is definitely one of those plays. So, but running into resistance up here in the mid 54s.
Right. Not a lot of volume in the pre-market. They were also bullish on Genworth Financial, lower price stock. We really don't talk about too much. They were kind of tooting their own horn. They had talked about it a while ago when it was under $10, and they just thinking another insurance company in the healthcare, in the mortgage sector, just poised, good solid structure. I believe that this is one of those issues that traded down in the financial crisis, Dennis. Traded down to 85 cents. They must have thought
Wow.
they left this thing out for dead here, and now rallying back. Kind of for you breakout traders here, making a nice move up here. The weeklies don't tell you much. The monthlies don't tell you much. I guess how far are we going to have to go back to try and find resistance in this puppy here? Boom, boom, boom.
Long ways back. You got to go out to 2010. Early 2010, you had a couple highs in the $18, $19 area, which is a ways away. But early 2010, there's a few levels in there.
Yeah, 1819 was your high back in May of 2010. Still another good buck away from there. Not trading. Is it bid up in the pre-market or is it just
Little bit, 1697. We are down 3 points on the S&P futures, maybe holding it back, but this one's not getting obviously as much pop as the MetLife is off the Barons. But this one has been on a complete tear here too, Joel. Look at this from the last week. This thing was $15 4 trading sessions ago. It's 17 now, so it's not like it's starting from a good base. This thing has already been running, so it's sometimes hard to really get the pop when they've already ran that far.
Yeah, I guess if you're looking to buy, you could buy this thing on if you can get it unchanged, 16.95 close. Let's see what the high was. 1695 close. Had a tight range yesterday at 1676. So this would be one of the options where you if you're buying it at 17, you want to see it hold 17.
Oh yeah,
You don't
oh
want to.
yeah. You don't want to see this come back
Yeah.
down, especially you almost though you had the low of 1644. If you're buying it for a swing trade, you almost got to give it a little bit through the settlement there. I don't know, because sometimes they like to come back out through settlement by a few cents and then pop up. So you've always got to be aware. A lot of people obviously have the stock on from the mark, which is 1695, and sometimes they like to take it through there. So I wouldn't get too scared on the long side until we, well, really until we took out 1644, but that's a ways away.
Okay, another interesting play and a stock not talked about hardly ever on this show here. Great Lakes Dredge and Dock Corporations, and they're
GLDD.
yep, and the name explains exactly what they do. They dredge ports and rivers and lakes for shipping purposes, I guess oceans as well. And what the article cited was the huge backlog from Hurricane Sandy. They just got a ton of government contracts that are supposed to be filled, over the next couple years. Here's the stock. It's had a nice move up, but if you're looking at the fundamentals, if they have a backlog of projects with really not much competition here, trading up above 9 in the pre-market, you're getting a gap and go here.
Yeah.
Like on this one, I might be a little bit more patient. Maybe try and buy it closer to the double top from Friday and Thursday, 871, 876. You did have a high at 913. We haven't actually. Someone got really
940. Somebody bought
yeah.
400 shares. That's getting way overdone. I mean, this is a Barron's article, but holy cow. It's bid 903 though. Somebody's sitting at 903 saying, "I want to buy this above $9." So $9 is a pretty good breakout for this too. Man, I don't think you're gonna get a shot at 876.
Okay. Well, 933. If you want to be the breakout guy, that was a
Oh,
high.
that's scary too.
Yeah.
This
Just
this thing's popping too much, man, already. But I don't know. It's just the guy's bid there and not moving. And 888, I see 885. I see backup bids below. People want in this thing.
yeah. Well, this should be an interesting one to watch off the open. You see the volume from Friday?
No, what was the volume?
175,000 shares.
Yeah, when you get these little thin puppies and they get promoted in Barons or something, they can really pop off. It's one thing to get MetLife, which obviously trades millions of shares. It's another thing when you get a little stock like this GLDD getting promoted in Barons because then a lot of other people take notes. Couple big institutions come in and that volume can double or triple in a hurry.
Right, and also, man, what if you're short this puppy, And I'm sure some people are. I don't know what the short float is on it, but I mean, you're not seeing any daylight here. And on the other hand, if a big institution or a big player, has a lot of stock and they want to juice this thing, it could inflict a lot of pain on the shorts here. But
Short interest pretty low, 3% of the float, 1.9 million shares of the 59 million. So it's not super high here, but same time, the stock, it's coming up here. You got to respect some of these levels, though, too, Joel. Some of the resistance we had, the 933, 924, 925, a lot of highs in there as well. So I don't know. And then obviously you get above there, then it opens right up. But I'm looking at 933 level that you cited there just a few minutes ago as maybe the initial resistance.
well, also, with these stocks, when especially these thinner ones, you get a pretty good indication, right near the open because that's where
Yep.
majority of stock comes in. So if we're at trading at 903 right now. If it opens up at $9 and it's heavily offered there, I don't know what heavily offered would be in
Or
this
heavily
year.
bid there when
Yeah,
you're
or
never going
heavily
to
bid
defend
there.
it.
That would be one where I would actually, I would keep an eye on the tape and see where the large bids or offers are here. I mean, also there might be someone that bought this in the middle of January under 760, traded down to 745. Here's your shot to sell it over $9. So we'll keep an eye on that one. And just going back to a little bit to the Bears side in Barron's, AOL, they're just a little bit skeptical of the run that it's had, attributed to more of cost cutting and financial engineering, as opposed to the franchise. They're looking.
What What a level there. Look at that $45 level from February. I haven't looked at this chart. It is just a brick wall up there. It's trying to get above 45. 1, 2, 3, 4, 5, 6, 7, 8 out of the last 13 trading sessions. It's topped out just under 45 bucks. The resistance, that's very well defined. I don't think it comes into play if they're bearish it because 44.04 was the close, but this is looking kind of scary if you're long this thing because that brick wall is there now. It's getting dogged and barons a little bit. Be interesting to see if this thing starts breaking down today.
You know what, Dennis? Can you pull up the volume on this? Because I'm seeing something pretty strange here in AOL.
Let me
Uh,
take a look
I'm
here. There's
seeing
no volume this morning. Zero
no,
shares
no,
traded
no,
this morning.
no. But look, on Friday it trades 860,000. On
Yeah.
Thursday it trades 11 million. On Wednesday, am I looking? What am I looking at here? I'm looking at the daily, and then
There's no 11 millions. I don't know. That's got to be.
oh no, okay, that's all right.
That's
No,
cumulative volume or something. No, the
oh, it's
volume's
a
been.
million.
It
Okay,
usually sits, yeah, a little under a
what am I?
million shares. It
Too many,
usually trades under.
too many
So
decimal points here. So yeah, let's. The $45 is key on the upside here, but look at the downside too. I mean, TradeTheRange.com here, 43.20. It's basically been stuck between 43.23 and that.
45.
Yeah, they got that pop up to 45.65 on the 5th, but boy, that was short lived.
Yeah.
So if you take that out, that $45 level should be interesting.
I
So
don't like this one. I think this one could break down. I'm not even going to be a bottom picker on this. I'm a seller of rallies of AOL in my own portfolio.
lawn consolidate. Do you have it in your portfolio, or if you?
No, if I did though, I would be a seller of it.
Okay. All right. Long consolidation period. Barron's trying to push it out to the lower end of that consolidation.
Let's take a look here. McDonald's comps just broke right at 8 o'clock when we started the show. Brent, you got those MCD comps, same store sales?
Yeah, sure. Let me pull them up real quick though.
Mickey
Just put my
D's.
headset back on. Okay, we had February same store sales system wide global down 0.3%. Looks like analysts were looking for a decline of 0.1%, so a little worse than expected. US same store sales were down 1.4%. We had Europe comps up 0.6%, and in the Asia Pacific, Middle East, Africa region down 2.6%. Looks like mostly worse than expected numbers from McDonald's.
What do you think of that chart? Kind of a little head and shoulders thing happened. I'm looking at the left shoulder multiple times, topping out over a 96. Got above there in the whole 97, 97.20 area. Then was struggling to 96, was getting defended. Then it broke down through 96. This thing comes back up to that whole 96 area. It's kind of forming the right shoulder here. Starting to look a little bit bearish on Mickey D's.
Yeah, someone's targeting this higher 95 level. Last three highs 95.61 to 95.79. So that's the resistance there. I don't even think I'd if it ticked 95.80 or 85, I don't even think I'd get too excited. Maybe some institution kicking around there at 96. What's also interesting here is that it has just recently filled the gap down. I'm not sure what the news was back at the end of February, but you gap down from having a 95.41. Let's see what it was on that day. The low was 95.71 on the 26th, and now you've come all the way back up to fill that by 8 cents here. So I don't like it either. I'd be more a seller up here in the higher 95s. And then coming back on the downside, you've had four consecutive lows within a 15, 20 cent range. So trade the range here in Mickey D's.
Boeing taking a little bit of a break here this morning. Obviously, we've got that Malaysian airliner that is missing. That's not helping it. But then late Friday, this was actually before the Malaysian story broke. Late Friday, Boeing is inspecting the wings of 42 of their 787 Dreamliners there. So wing inspection, never a good thing for shareholders. Gets them a little bit nervous. And the stock is traded down $1.50 here this morning.
Yeah, you had a straight tick in here. Really, no lot there down to 126, but a little more volume traded at the 126 level. I just want to alert our traders to this 126, lower 126 level. You had three consecutive lows between 126.21 and 126.36. That is the area. Also had a low in that area at 26.35 back in February. That's the major support level. Don't want to be long this thing under that 126.20 level. Coming back on the upside, you did have a double bottom from Thursday and Friday's trading just above 128. That will act as resistance if it can go in a rally. And also, look, I mean, that's a pretty quiet looking chart too, Dennis, for
It
$130.
is.
Oh, $130 stock really hasn't participated in the rally as of late.
You can just tell when you look at that chart what number jumps out at you. 130. It
Yeah.
just jumps out. That means there's somebody big probably targeting that area in the whole early low 130s as a sell. And they've been just lining up and blocking it there. You got one, two, three, I don't know, seven, eight highs basically in the last month, just above 130. The high on Friday, again, the same thing, 130.16. If you can identify these levels early, obviously there's plays. I don't know if it's going to come into play today, no, though. Now, obviously, unless we get a huge market reversal or something, because this is trading down $1.50 here in the pre-market. But you got to think as it rallies back up. If it rallies back up, there'll probably be more sellers up there again. Look at just a couple other ones here. Bed Bath and Beyond, which is triple BY. They did a fourth quarter update after the bell on Friday. Q4 comps, they're seeing 1.7%. Analyst estimates were up at 2 to 4%. They also did their full year guidance, and they're saying on 2014, this is last year's, they're seeing now $1.57 to $1.61. It's a little bit weaker than they expected. They are citing the weather. Again, all these retailers citing the weather. We hear this almost every day. Stock tanked on that initial report after hours, went all the way down to $67. Wasn't down there long. Half an hour later, was trading up. Is back up here at 69.34, trading up 18 cents. So they are shrugging this off.
Right. Someone puked a piece there.
Puked it big time, yeah.
Yeah, 23,000 shares. Just
News algo.
get me out was the order that they tagged that one, and they did. They bottom ticked right there. 66.99 is where I show the print. And now you've gotten a bounce back up. When I see this kind of information and the close come out and that kind of reaction, I like to keep an eye on the closing price, and that was 69.16. You're trading just above that right now. If you can hold that, go up and test the high from Friday at 69.68, and then you got to go back a little bit farther, and you got a couple highs right at the $70 level, 69.90 and 70.10. The highs from January 10th and January 13th. So average price, someone to sell there at 70. That would be an excellent resistance point. Coming back on the downside, the support was pretty well defined too. Three lows between 67.94 and 68.01.
Let's look at some of these fuel cell plays
Oh my
again.
gosh.
Every day I come in, these things are up 10%. BLDP trading up 12.88% here right now at 596. You've got Plug PLUG. That's taken off again. It's up another dollar here almost. Well, it's up 81 cents at 908. This thing has just been on a 2-day tear. 3 days ago, it was $6. It's $9 now, so it's up 50% in the last 2 days. Incredible. And then the one that's going to report tonight, FCEL, it's up another 30 cents, which is 8%, trading up at 383. These things are just on monster moves. You just cannot, these things just don't, they pull back a little bit and they just come in and buy them again.
Uh, any fundamental news to support this move this
I think
morning?
it's just the run ahead of the FCEL earnings. Everybody's, been jumping on board here on these fuel cell plays. They're all excited. It's kind of like buy on, ahead of the earnings. We'll have to see if they do sell it off after the earnings, but it's going to report here after the bell tonight, and that's going to be a big move. They're going to be big movers, probably all three of these off those FCEL earnings tonight.
Do you play the sector at all, or
Yeah, you know what? I'll nibble in there on some pullbacks and play it a little bit. But right now, it's almost like gambling. It's so hard to predict the day-to-day moves here, especially when the things are up. I guess unless you're just buying it. The play has been to buy these things on the Thursday night and sell them the next morning. Because like I said, it seems like they go up 10% every morning. Obviously, that's not going to be the play tonight, though, because FCL has earnings. So you have fundamental news coming out here, which is going to dictate the next move.
uh, man, this thing's been trying to get through 390 here since 6:15 this morning. and trading substantial amount of volume here. So let's keep an eye on that 390 as well as the $4 level. Nice round number. This thing made a high at 402 in January of 2010. So I don't know. The run be could running into a definite seller here in the pre-market at 389, and then $4 once again was your high. 402 was a high in January of 2010.
We saw it a couple days ago where these opened real strong and gave it all back. Do you think this could be one of those days here, or do you think they're just going to keep running it all day ahead of those earnings?
Boy, I tell you, if you're not taking profits in this thing here, this thing was a buck 40 a couple weeks ago. Now knocking on the $4 level. Obviously, you have no inkling. I mean, earnings. You're going to be really kicking yourself if you don't take some profits ahead of this. And it
If the
comes
earnings
out,
report
yeah.
isn't good.
I mean, with this kind of movement, how good? I mean, they could beat by a couple pennies and still get pounded. I mean, very high expectations. I mean, are these companies still just like losing money? I mean, are they? I don't even know if I haven't really done much research on
Brent, you
these.
know any on the valuation or the earnings front on any of these things? Like, what's the estimates for FCEL tonight here? Let's take a look at the earnings. Brent?
I just popped over to Plug Power. Plug Power's got earnings on Thursday also. They are looking for a loss. Let me pull up Fuel Cell
Looking
really
for a
quick.
loss is
Loss
what
of
we
like
really
8
need to
cents.
know.
Fuel Cell is a loss of like 4 cents per share. And then the one that already reported, Ballard, BLDP, they were looking for a loss also there, and the company did report a loss. So yeah, it doesn't look like they're quite making money as of yet.
What's the estimates for a fuel cell tonight? You got those
Yeah,
FCEL?
sure. I think it's a loss of 8 cents, loss of 4 cents, sorry. And then going out to the fiscal year, doesn't look like even in fiscal year 15 they're going to be reporting a profit either.
I don't know what to say. These things, like you said, Joel, they've been on such a tear, such a run. Like I said, I had the Ballard Power. I sold it last week, maybe a little bit early. I think I sold it at 510, so I'm a little bit early on the sell. But I watched the stock go from $2 to 510 in a week and a half. So I was like, I got to ring the register on that one and get the hell out, and I did. So I'm not in any of these plays here now. I'm going to wait to see what the fuel cell earnings here do. I just think it's overextended and they need a break, but I don't know if I'd come out shorting them either, because what if they blow the numbers away? And like we saw, once the momentum starts going in one direction, it's very difficult to predict when it's going to end. But I don't know. That's been such a run. If I was long these things, I think I'd be ringing the register a little bit.
Did you do it on a day trade or did you hold it
No,
for?
I had it in my investment portfolio for a while. And that was actually one I've had in there for a long time here, and it's just been tearing up. It's been moving up, moving up, moving up. I actually had options on the damn Ballard Power too, and I wish I would have been out a little farther. I went 2 months out, I think back in like November, and they expired on me in February. They expired on me in February. I had the 3 calls, so I
Oh,
just missed it. Yeah, then that always the way on these little lottery tickets plays. That's why they're lotto plays. You're buying them cheap. I think I bought them for a nickel or a dime back, and when it was tearing off at the beginning of the year, it went from like a buck 50 to like 250. I think I was buying 3 calls there a month out or a month and a half out. I had like 6 weeks. They expired on me, worthless, and then the thing took off. So kicking myself that I didn't go out an extra month, but that's what happens
well,
sometimes.
and you picked it up. Just it caught your eye from a technical perspective, right? You
Yeah,
could
they
get.
had just started. Well, if you look at the chart back in December, the thing was like $1.50, and it ran to 2.50. So I always want to see like if I can get an option that's 30% up real cheap. I know Nick always talks about the lotto plays. I do the same thing. If I can pick up a cheap option that's maybe 25, 30% higher, but if I buy for a nickel and I just watch the thing run 30% in a couple of days, it means it could run another 30%. So it's always, and some of these plays, most of them don't work out, but the odd one that does work out, like I would say, 8 out of 10 expire worthless on me, but the 1 or 2 out of 10 more than make up for it. So that's the lotto plays. The problem is now if you're doing that, everybody's doing that on these stocks. So, the options are really pricey. Like, let's just go out and take a look at the options real quickly
Yeah,
here.
it
On
was.
the Ballard Power, if you were to look on this one on the options, I'm just looking at the chains for March. $6 is like 35 cents off, or that's quite a bit of money. Even the sevens, so you only got 2 weeks left with this thing. The sevens were like 10-cent bid. So on the BLDP, that's a long ways out, and that's quite a bit to pay. I mean, I wouldn't pay 25, 30, 35 cents for a $6 call option on a $5 stock. That's getting a little bit expensive. But we can buy those for a nickel or a dime, it's a little different story.
Yeah, that'd probably be another way to ring the cash registers too, is to sell some of those calls and lock in the some of the profit there at least. But Dennis, we're gonna take a quick break, and we're gonna bring on Tim Melvin, a Deep Value Investor Letter. So we'll be right back with you. Welcome back, traders and investors. We have Tim Melvin on here, the Deep Value Letter, discussing long term investing and investment and finding values in stocks. And Tim, we need you. We need you to find value in this market because we're just going sky high here. How you doing there? Are you still in sunny Florida?
I am still in sunny Florida. Beautiful day down here. Probably going to hit 80 today, so loving
Wow.
life.
80 degrees. It's like a pipe dream, Joel.
Yeah, I don't even want to think about it. But Tim, market had a real nice run after the unemployment number. Gave a little bit of it back here. We're starting to see a little bit of shift in stocks. Warren stock took off. Maybe some of the value stocks are going to be the next leg up in the bull market. But still momentum stocks like in these fuel cell stocks and stuff. What have you been looking at as of late?
Well, one of my techniques for finding things that are very safe and very cheap, and have the potential to go higher, particularly in a market like this, where value's getting a little thin on the ground. It's hard to find cheap stocks in here. But if you follow what the private equity funds are doing, they tend to be one of the first or second investors into a beaten-up sector. We discovered this last year, really, when we noticed that the big distress funds, like guys like Wilbur Ross and Avenue Capital, and then Kohlberg and Apollo and a few of the private equity firms were starting to buy shipping stocks.
Uh-huh.
And they were making substantial investments in shipping. I was like, well, these guys have the same time frame I do, that 3 to 5, maybe even 7-year time frame.
Wow.
And shipping stocks were just beaten. I don't remember if you remember the end of 2012, 2013. Murdered. I mean, just dead. Trading 30, 40% of book value. Looked like nobody would ever ship anything ever again. And as we followed that money in there, we found bargain stocks, companies, with strong balance sheets that could definitely survive through the weak times. These things have doubled and even tripled over the last year. So I was like,
Which stocks, which specific ones are you looking at?
Well, I mean, we just sold Starbulk up 100% in less than 6 months on the heels of their refinancing and equity raise. But we own like Sakos Energy, Capital Products LP, the liquefied natural gas company. Which other ones do we have? We have Global Ship Leasing. So we've got a bunch of them that we picked up about this time last year, maybe actually January. If you look now, there's a couple sectors where private equity is starting to do the same thing. They're just kind of creeping into the sector. and you kind of go digging in with them, and you say, this sector is really cheap. These guys are not putting their money in because they don't want to make 4 or 5 times their cash over the next 5 years.
Hey Tim, just going back to this Starbuck. Now you said you sold something. Now was this a? Did you just look at this run from 13 to 15 and just say, this is ridiculous, or was this a long-term target that you had on the issue?
Anytime I buy a stock, I develop 3 numbers for every stock. One's the price to book value. Obviously, that's my metric. One's liquidation value, and if a stock goes from 80% of book and trades down to liquidation value, I'll add to the position. But the third price is the ongoing concern value, and that's my estimate of what the company's worth in a rational world to a rational buyer. That's the fair value. If the price tags that fair value, I sell the stock.
So SBLK has tagged that fair value now?
It absolutely, yeah. It went from like 45% of book to 1.2 times book, and of course the equity offering had diluted book, so the book value shrank a little bit. But when it hit that number, we were out.
So you're out 100%. You're not holding any in your hip pocket for a trade. You set your rules and you stick to them, and it hit your target. Boom, you're out.
Yeah, I have to do that way. I have to do it that way. It's just that hoping and wishing that maybe it'll go higher has not worked out well for me over the years. So when it hits fair value, it's time to say goodbye.
Okay, all right. Now that's having a trading plan and sticking to it. So that's what we try and stress here to the investors here at the Options House chat room. So, all right, what about the banking sector? Now, what I noticed in the banking sector was, boy, we had that rally off the 1732 handle, and it just left the financials in the dust. And then they kind of perked up last week. Are you still finding any value in the financials?
Well, yes, I am. But remember, I specialize in the small banks. I don't really care what Bank of America or Citigroup or any of the larger bank stocks are doing during the course of the day. That's not what my interest is. I like the small banks, the little ones.
Which little ones are you looking at, Tim?
Oh, I've got a list of about 30 here.
Okay, pick 2 or 3 here. Pick 2 or 3 of the ones you like. Ones you're just thinking about buying or bought recently.
Okay, let me just pull the list up here. Hopfed Bancorp is one of my absolute favorites. A little bank out of Kentucky and Tennessee.
What's the symbol on that one?
That is HFBC.
Oh, wow, this is a real thin one.
Yeah, and all of these are like this. Okay, these are just little community bank organizations. The regulatory pressure and cost is really getting to all of these banks. They almost can't afford to stay private. So you're going to see a lot of takeovers.
So in a stock like this, do you just, this is kind of the thin one. Do you just put out you say, hey, I want to own it at, 1160, you stick a big bid out there. Oh my, look at the volume on this.
This is like trades like once every couple of hours.
Yeah.
We're talking.
Yeah, no, listen, guys, it trades by appointment. Okay?
All right,
It
wow.
really does.
And the scary part is that's one of the larger ones.
Holy cow, you're trading. Okay. This is thin. This is almost, it traded 3,300 shares on Friday.
Right.
Wow.
And it was a good day for it.
Tim, are you trying
a more liquid one's ESSA Bancorp.
Yes,
that's the larger market cap. But, same story. Reasonably small bank, trading at a healthy discount to its book value. These guys just raised their dividend by 40%, announced a new 5% stock buyback. Everything's going right for these guys, and there's a good chance that they'll be taken over the next couple of years.
Boy, someone has a piece here at 1175. They just don't want this stock to go through 1175. I'm looking at the dailies, the weeklies, and the monthlies, and boy, that thing has been. If you can take out that guy at 1175, Tim, you're going to be looking good. But that's been a major resistance.
I don't know if anybody has a piece on any of these stocks. Joel only traded 9,700 shares on Friday. Hell, if I was trading that thing, you'd say I had a piece on it. These are thin. These are super thin.
These are not for traders, guys.
Not for
Okay?
day trading because, obviously we've talked about some of the market structural issues and high frequency
No.
trading and internalization, and it all gets a little bit tricky. But as long-term investments, it's a different story here on some of these stocks. You can obviously
Yeah.
invest in anything, but there's probably just not enough volume here to be an active trader in these ones.
No.
Are you
And
finding?
these are not for your active money, okay? This is for your long-term 3, 4, 5-year money. But the last time we had a real crisis in the banking sector was in late 80s and early 1990s. Coming out of that crisis, the average community bank over the next 8 years rose tenfold. They're cheaper today than they were then.
Yeah, I'm just trying to look out to the monthlies, looking long-term on this thing. This is one, it's interesting on some of these stocks because I'm looking at this in 2008, 2009. This stock did not sell off. It didn't sell off with the financial crisis, which
Nobody
is,
understands.
yeah, maybe that's, like 2008, it really didn't sell out that much either. It's very interesting, actually, that, these stocks didn't sell off in the financial crisis. I thought every bank got hit in the financial crisis.
A lot of them did, and if you look at, at the fundamental ratios on these things, they're trading at 75 and 80% of tangible book value. But they're not going to have the wild swings that larger cap stocks are because the large funds can't buy this. I mean, Fidelity can't come in and buy a slug of this stock.
How would they even get it? Yeah, how would they even get the stock with that?
If they put 1% of their funds into a stock this size, they own 20 of them outright.
Right. What about is Huntington Bank shares? Is that a little bit too big of a stock for you? HBAN that has some local interest.
I like that bank. They're going to be a serial acquirer as we go forward. They're going to be a buyer of banks.
So you don't want to. Okay.
No, I owned a lot of that in 2009 when the bigger regionals like them and Key Corp and Fifth Third all just got ridiculously cheap. That's a good bank, and I think in a bad market, I'd look at buying more of that one. It's a very well-run bank, and there was an insider buying it this week.
Okay.
I like this little thin bank talk because we never talk about these little thin ones. Give us a couple more symbols. So you got the HFBC, the ESSA. You got any other couple, obviously? And remember, these aren't trading vehicle guys, but if for our investors out there that like these little thin ones.
What are you talking about, Dennis? You've traded, when we were at Bright there, we've traded plenty.
I used to trade some thin stuff too back in the day.
It used to be scary, but.
I used to trade that like White Mountain, remember, like WTM and WPO when it was out there, the White Mountain one. It would be like 300 or 500, or the WPO was like $1,000 stock. I'd be sitting there trying to make a market on the thing. I'd be on the bid and on the offer 10 points wide, trying to make 10 points on, by market making on them. But so I got a little bit of backup experience with some of these things too. That's why I am interested. I'm interested.
Okay, go ahead. Give us a couple others.
All right, a couple more. The one caveat, guys, if you're going to buy these, please check the bid and offer and be careful with your order.
Market orders, dangerous. Even limit orders, everything's dangerous on this.
You put a market order in on these things, you just became somebody's lunch money, okay? Anyway, Citizens Community Bank Corp, CZWI, again, trades, around 3,000 shares a day. Just a nice little bank, Wisconsin, Minnesota, Michigan.
What's the symbol on that branches. One again, Tim? Tim, what was the symbol?
CZ, zebra, WI.
Yep. CZWI.
Yeah. And then one that we just added to the portfolio is Chevoit Financial, symbol CHEV. And again, it's an Ohio-based bank. They've got 12 branches. Bank's been around since 1911. Stocks trading at 77% of book value.
Do these stocks pay any kind of dividend?
That one does, yeah. It's got a 3.5% dividend.
Okay.
And that's part of the story here, guys. A lot of these banks cut or reduced their dividend during the financial crisis. Now they're reinstating and raising them. This is going to be, in my opinion, the leading dividend growth sector over the next decade.
These are real interesting. Like this market cap on this CHEV is $71 million. Like this is ultra small cap right here, micro cap you're talking. So yeah, it's interesting. These are different types of plays. Very interesting.
And
there's going to be a takeover wave in this sector that's going to be just absolutely breathtaking over the next 5 years. These guys don't have a choice. They have to combine. And add that to the fact, like Huntington, the reason they're buying banks, there's no organic growth in the banking system. In order to grow earnings, they have to buy other banks.
Do you play any of the Canadian banks at all? Some of these smaller ones? Because I got one little small bank in Canada. I'm not sure if you know anything about the Canadian ones, Tim. Laurentian Bank, which is LB in Canada. You won't be able to get a symbol on it, but just curious if you look just in the U.S. or if you do look to other countries on some of these investments.
For the bank portfolio, the major bank portfolio that we run in the newsletter, we look just at U.S. But in the international value portfolio, if it popped up on the screen, then we'd be a buyer. We're not that selective about industry groups in that portfolio.
Okay.
Because this is the similar type of play. It's a branch mainly in Quebec, and I think they have 40 or 50 branches, just a small one. And I was looking at the same way. That you got basically in Canada, you got the big six banks like Royal Bank of Nova Scotia, and I was looking at some of these smaller regional ones, and just wondering if the same thing might happen there. So it seems like you're trying to look at the U.S. plays with these CHEVs as some of these small little ones that might get scooped up by some bigger ones. The same way I was looking at, like I thought Laurentian could get scooped up by some of the big ones in Canada.
Okay, Tim, I got a question for one that I actually have in my portfolio, but hold on for a long time. Are you familiar with MBTF, Monroe Bank and Trust?
No, let's take a look at it. MTBF, Monroe Bank and Trust.
Yeah, what's puzzling me here is they got a huge secondary going on at like 420, and kind of hoping that price to act as a magnet to kind of get back down there, but it's just not going there. Been trading between 480 and $5 for the longest time, so that bank's been around since I believe like 1828.
Whoa.
And it's MTBF?
MBTF. Mother.
MBGF.
Yeah, mother, brother, Tom Frank.
Okay, for some reason my machine
MBTF, not GF.
T.
Yeah. Any idea why they're doing a secondary?
Just raise some capital, I guess.
So that's probably going to be why your stock's not going anywhere. They're got a challenged capital situation.
Okay.
Generally speaking, with these little ones, if they do an offering, see, this is just not coming up anywhere. What's the name of the bank? Monroe?
MBTF Financial Corp.
I've got it here.
Yeah.
I just wrote in the chat. Michael, Bob, Tom, Frank. We've got it up on the screen there too.
Well,
it's been trading
yeah.
$4.50, $5. Looks like you were saying, Joel. Somebody's got a piece. They must be selling a couple thousand shares up there. This thing's a thin one too.
Yeah, generally when these guys do an offering, they're light on capital, regulatory capital. So you wait till after the offering to buy them. That can often act as a trigger.
Right. Okay. Yeah, I was waiting for it to come down. Okay, Tim, you definitely pointed out some great stocks for us here. In this kind of market, you need to find value. Thanks for taking the time to be with us, and we hope to check in with you again soon.
All right. Thanks a lot for having me on again, guys.
Okay.
Thanks, Tim.
Okay. Talk to you soon.
I always like trading those little thin ones back in the day, but you can't trade these things now as easily as you could in the past. Investing in them, if you can invest them, it's one thing, but a lot of times the spreads are a little bit wider. Like I've talked before on the show, we won't get too market structural with you, but with high frequency traders, they've kind of monopolized the top of the queue. But also we've got this, off exchange stuff where we've talked about these internalizers, where they're basically, if you put your limit order out there, they can match your limit order price if there's a market order coming in, because they can usually intercept those. So it's kind of hard to get filled on the bid and the offer. So when the spread tightens on some of these things, sometimes you can pay it, but it makes them really tricky to trade. So all you really need to know is the real thin stuff is very tricky to trade because it's hard to get filled on the bid and the offer. And you obviously don't want to pay the spread because the spread on these things can sometimes be 4 or 5%. So that's why I kind of tend to stay away from trading the little stuff like I used to, just for those reasons. And we kind of focus more on the trading from the big stuff. But as an investment on some of these things, it's a different story. So if you don't mind paying a 2 or 3%, on the spread sometimes, then maybe long term some of these things can work out for you.
Well, I think for Tim, he's looking at a very long time horizon, so he can sit there and be as patient as he wants. Either with just putting several bids out there to get done, or the best way and the way we used to trade those thin stocks is not show your hand. And if,
exactly.
And if you wanna, let's just use the Huntington Bank share. That's a little bit of a thicker stock.
That one's probably okay.
But something else, and what we mean by that is, let's say, You really want to buy, 5,000 shares of CZWI, Citizens Community Bank Corp. That's what you want to own. You want to own 5,000 at 820. You wait till it's offered there for
Yeah, and
5,000,
you lift it.
and then you lift it, and then you hope and pray. Because if you put a bid out there at $8 for 5,000,
They'll
then
sit and lean in front of you all day. They'll just
right,
keep leaning in front of you and leaning on your order and using your order as insurance. So you're exactly right, Joel. Is the key when you're trading small little thin stuff is to not show your hand. You're just sitting bids out there and they'll just use your bid for insurance on these things. They'll sit there and they will literally lean. Like a lot of people say the market structure is broken and everything's, you hear a lot of stuff. And for the most part, the market structure is probably better than it was 10 years ago because you obviously have some tighter spreads in the big caps and the large caps. But on the little stuff, it is kind of broken because you have so many participants, they're called internalizers, that will buy order flow from other companies and basically get first dibs. And what they do is they take the other side of the market orders coming in, and it's very hard to get filled in the bid. So what you need to do as defense is not show your hand if you're trading these little stocks because it's real hard to get filled in the bid.
All right, let's recap some of the stocks we talked about earlier here. MetLife here getting the love in Barron's, trading up here in the pre-market. Few trades here at the 53.68, 53.80 level. Really not enough of a volume move for Dennis to validate this as a move you don't want to get in front of. But just looking at the charts here, we've had these highs in the 53.50 area. He hit 53.61 on Friday. Going back to earlier in January, had a high at 53.46, 53.50. That number's just sticking out in my head. If I'm trying to pick this up, off the open, paying up 50, 60, 70 cents, boy, if it comes down and fills the gap there to 53.61, I would like it to turn around and go right back up because it's kind of an extended move here since this was at $51 3 days ago. Dennis, you gonna mess
It's
with?
got a pretty big buy imbalance right now, 58,000 shares, and that is sizable for MetLife. So somebody's already institutions are coming in there. I don't see the 10 in the book either, so I wouldn't be surprised if this thing actually opens up even maybe a little bit farther than it is if that buy imbalance does stay. I think this could be one of those that could open up and then give some back. $54 is really where I'm seeing a little bit of resistance in the book. I see 18,000, 20,000 shares basically up at $54. A few guys stepping in front of them in the 53.90s. So we'll have to see what happens here in another half an hour when the stock opens. But if it's to open up in that area, it might be one of those where it opens up near the highs.
Colts luck, this GM. I was looking at this on Friday, and I was hoping it would get back to. It got to 38 earlier in the session, and then sold off from that level. Three consecutive highs between 38.01 and
Wow.
38.05. High freaks leaning on that level. You also had a high on the earnings day of 38.11. That's what precipitated the sell-off here, well under 35. You want to see this thing bust through 38 here to get the momentum going. But for now, it's trading right near yesterday's low, Friday's low, 37.45. Three lows in a row, 37.33 to 37.54. I'm not loving this thing if it breaks this 37.40 level. Good chance to go down and fill the gap down to 36.99. But pretty well-defined trading range in GM.
Is trading a little bit weaker after the bell. Carter Worth there on CNBC. He's a market mover there. When he comes on and talks about his charts, you can watch the action, and he comes on Fast Money there sometimes. And around 5:10 on Friday night, he was dogging both Ford and GM, saying that both charts he did not like. Saw them both from a bearish perspective, and as he's talking, they start whacking Ford and whacking GM. So he is a market mover, and I'd imagine that's why Ford and GM are showing a little bit more relative weakness maybe than the overall market. Ford's trading down a dime here, which is about 0.7, 0.8%, when the S&P futures are only down 0.2%. So you can blame Carter Worth for a little bit of the selling pressure here off the hop. He's bearish those stocks.
Yeah, 15.54 was Friday's low. We are trading below that level. You tried to fade Carter on Zynga a couple of weeks ago, didn't you?
It worked out. Yeah, it worked out, and I'm glad I got out. That was a short-term trade. I tried to fade him. It went up, I think, to, I don't know when that was, like 3-4 weeks ago. It went from like 420 to like 450 on what he was talking, or I can't remember the exact
I
prices,
think
but
you
it popped.
shorted it like 470, 480. I
Is
think
that where
I'm
it was? It was up in
yeah.
the 470, but it rallied like 30 cents. That was the bottom line. I was like, holy cow, Carter shouldn't have that much pull on a $4 stock. And it rallied 30 cents. I did fade, and I was able to make, I think, 10 or 12 cents on the pullback from the Carter war. So sometimes I do like to fade those plays. Well, but when the stock's only moved a nickel or a dime off Carter, then that's just not enough move there to fade, in my opinion. So I'm not really looking to come in here and buy GM and buy Ford because Carter was saying sell it. It's when it gets overdone there and starts to get ridiculous. That's where I might come in trying to fade those moves.
Okay, we're going to shift gears once again, and we're going to bring on Ross Weiner of Gemsco Capital Management. He's involved in the equities markets and the real estate market here, so a little bit different. We're going to take a quick break and get him on. We'll be right back with you. Welcome back, traders and investors. We have Ross Weiner on of Gemsco Capital Management, and this guy has a little bit of different market and education background than we do. Ross, how you doing this morning?
I'm doing great, Joel. How are you?
We're doing good. Warming up here. We're getting into the mid 20s, so we're getting happy here in Michigan. Don't want to get carried away. But can you just give us a little bit of your background? You got a diverse background there, as well as your education.
Sure, sure. Well, let's see. Education, college at University of Pennsylvania and MBA at Columbia. And my background, Professionally, really started in the real estate business on the investment side, and through that business got involved in taking positions in publicly traded real estate equities, limited partnerships, secondary market interests, that type of thing. And when I, started my own company some years ago, that was one of the themes that I got involved in, was to take positions in small publicly traded real estate companies that, I might kind of like a mini activist, if you will.
No, that's good.
Take positions in. There was a company I tried to buy and ended up putting in play, and another one that we took a position in and got them to liquidate because their cash, they had more cash on the books than their real estate was worth. And, that led to my getting more actively involved in the stock market generally, beyond just the real estate end of things, and that kind of heading into the .com era.
Right.
And things have just sort of grown and evolved over the years, and the equities and then later options became a much bigger and bigger part of my business.
So you're doing work with these real estate, different companies, it's different real estate trusts. So you're getting to know them. You're doing a potential deal with them, and if if you're comfortable with the company, their direction, the way they're handling the deal and the management and stuff, then you take a stake in the equities of the options market in the company.
Well, that's what I used to do. I'm really not very active in the real estate side of things anymore. When I had started it, I had a particular edge because I was very active in the private market and knew a lot of the players, and people were just starting to, the REIT market was just really starting to get going. So all the private guys that were going public as REITs, I knew a lot of them, and also had, from the private market perspective, a very good understanding of what was going on in the private real estate markets and being able to translate private market versus public market value, and still have that edge. But the REIT market to me has gotten so big and out of control and institutional. I mean, big and institutional on the one hand, and a little bit out of control from a value perspective. So. You can't find any more 50-cent dollars or 70-cent dollars or anything like that in that business. So it's just not compelling, and it's a tough short because money is going there for yield, and even though the yields aren't that great, people think that 2 or 3 or 4% yields are good. But a lot of these REITs really should be at like 8% or 9%
Right.
yield.
Okay. Did you ever find any companies when you were trading that kind of style that you just like they're impossible to deal with? You hated their balance sheet and you played them from the short side, or did you just try and play it? Find companies that you like doing business with or like the way they transacted and played it from the long side?
I did. I mean, there were certainly ones that I would take short positions in or hedge or use options. To play the short side, but what I found in this last 5, 6, 7 years is that the valuations have been kind of hanging up pretty high, maybe like the last 3 or 4 years. I mean, it's funny because if you go back to the 2007, 2008, 2009 period when we had the financial crisis, there was incredible carnage in the space.
Right.
And there was tremendous opportunity. And frankly, at that point in time, I was working for a hedge fund for a short period of time, and I was trying to get them to buy a lot of these real REIT equities and preferreds and the debt of REITs. I mean, because you had companies like Simon Property,
right,
which is kind of the bellwether, one of the bellwether REIT companies, was trading at like $20. So it's like it's like 150 or 155, 160 now.
Correct.
And the $20, they were all trading like they would never get financing again, and they were all going out of business because the fear was that none of these companies would be able to refinance any debt that they had that was coming due in the next 2 years. And you could have bought debt on companies like that or SL Green or some smaller companies for like 50 cents on the dollar, short-term debt that was coming due in like 2 years. And if you understood the balance sheet and capital structure, by a year later, you would have gotten paid off, at 100%.
Handsomely.
It was ridiculous.
kind of in the market. So you do you. I mean, obviously the real estate market and the equities markets, bottom just about 5 years ago at this time. So yeah, I mean, do you find direct correlations between the two still?
Um, yes and no. I mean, I don't really follow it that closely. I know some people think there is a direct correlation and between it. I don't really see it so much, except for the fact that in both cases that you've got all this capital that's been looking for yield and a home. So some of it's in the equity market, and some of it's in the REITs for yields. And on the private side, particularly in big cities like New York or Boston or Washington D.C., there's been a big chase from investors because there's cheap debt and there's a lot of foreign money and coming into these cities. That have really kept valuations really sky high. So I'm a little bit wary
Okay. So you made
where
a
things are.
transition from real estate. You want to get involved in trading. Did you just kind of self-educate yourself, or did you read some books, or how did you approach it?
It's a little bit of both. I mean, it's really, the books are really, more of a reference source, but really self-educated. Some of it from the School of Hard Knocks. But over time, I mean, I had a fund in the '90s that was doing all the REITs, and then you had the whole .com era, and everything that happened around that, where everybody thought they were a genius in a
Right.
rising market. But really self-educated over the years, and particularly in the transition to more and more options trading. I mean, I've got all kinds of books, but the truth be told, I never have time to really read them. I mean, and a lot of the books that really that come to be more useful to me are things more on the technical analysis side, because coming from a background where you had no grounding in technical analysis, so that's been
That's where you
useful
got
to
your
pick
education.
up along the way.
Okay, so now you've kind of branched out from trading the REITs and the real estate stocks now, and then that's just you just scary at the valuations as well as the valuations in the market. So it's just kind of a hands-off approach.
Where we are right now?
Yeah, in
It's
these REITs. I mean,
definitely not a. Oh, in the REITs, yeah, the REITs don't really have much interest to me at this point. I mean, they just don't, because there's really there's no rationale in terms of how they trade or why they trade, and a lot of them are pretty slow moving anyway, so it ties up a lot of capital. So unless you could find a takeover play or something with an obvious catalyst, it's kind of hard to have an edge. I think there are just better opportunities in other spaces, and I've really lost interest in the REITs for now here. I mean, I think if we start to see cracks, more cracks in the economy and rising interest rates and stuff like that, I think then you'd have an opportunity to look really on the short side on a lot of these companies.
okay, so what are you
I mean,
looking?
you could scalp them, now, for example. I mean, if you wanted to trade a company like Simon,
What's a
um,
symbol on that?
SPG,
That's what I thought. Okay.
I think you can probably look to go short above 160 or 165, or you could look to sell some calls. I mean, it's such a big company. I mean, there's nobody's going to be able to buy them. They'll end up buying other companies. You could probably, in a short-term thing, look to be on the short side down into the 150s or high 140s. But in a properly valued market, I think Simon would be worth a lot less than where it's trading.
It's
I don't know what that
interesting.
number is, but a lot less.
Okay, so interest rates. I
And
mean,
that goes for everybody.
the Fed's talking about they actually talking about maybe stepping up the taper a little bit. What's your long and short term outlook for interest rates?
Uh, I try not to be a prognosticator
Good.
about
Okay.
where the interest rates are going to go. I mean, obviously, when we're at zero, you would think that the direction is going to be higher. They're trying to hold things down, particularly on the short end. For zero, but it's there are two ways to look at it. One is that it's unsustainable at these levels, and the other is that they have to try and keep them at these levels because in reality, if rates start rising, that's going to be very bad for the economy. I mean, just on the what happens to the U.S. Budget deficit. I mean, one of the reasons why the deficit sort of has been coming down is because they've been able to keep interest rates so low, and the interest on the debt would skyrocket as rates rise, and that would blow out the deficit.
Okay, what about all right? So you said that you're kind of staying away from the REITs and the real estate companies. So what other spaces are you looking at?
I look at everything. One of the areas that I've built up pretty good expertise over the last 5, 6, 7 years is in the energy space.
Okay.
Oil and gas and E&P type stuff. So I've actually got a lot of positions there and very, very active in that space.
Okay.
That's probably the biggest space that I'm active in. I mean, I dabble in like everybody else, with other things, the indexes, some of the commodities, silver, gold, oil, natural gas, and technology space, and different things.
Are you trading the commodities with the gold and the crude, or are you trading?
Occasionally, yeah, occasionally, yeah, through the ETFs and through some other vehicles, but yeah.
Okay, and what's your outlook for you currently in the gold market or on the sidelines?
I don't have any position. Most of those tend to be sort of very short-term, short-term oriented positions and swing positions, either through options or whatnot. So when gold was around 1,200, I was trading it to the long side and kind of lightened up along the way. And now that we're at like 1,330 or something
Yep.
like that, I don't really have any positions on it. I don't really have it's hard to have any kind of a particular edge in something like gold,
Right.
which doesn't really have a real supply and demand component that you can look at. It seems to trade very technically, so you just try and line up on the technicals. There were people thinking gold was going to 1,000. I thought maybe from everything I saw that gold might find some support at 1,200, and that's a little bit of a speculative type activity, and played it that way.
Okay, so you do like to file technical analysis. What type of charts do you use?
I've got a variety. Really, I've got multiple screens in my setup here. I look at things basically in different time frames. So, on an intraday basis,
Okay.
I have charts that are usually I don't use 1 minute charts, but
Neither do
I will
I.
use 3, 5, 10, 15. You can go up the range. I'll look at 30-minute charts, 60-minute charts, daily, 2-day, 3-day, 5-day, weekly. So I look at different time frames depending on the positions, for support, resistance, trend. On some of the shorter term charts, I use, I've got moving averages laid in and pivot points and
The whole gambit.
things like that. Yeah, it depends. You can draw, you can go a little overboard
Yeah.
with that stuff. So, I try and, sometimes you're better off keeping it a little bit simpler. So a lot of them might just have, just kind of like a Bollinger Bands and a 20 MA and, maybe a MACD on it.
Okay, is there anything? These fuels. You mentioned fuel stocks or energy stocks. Have you been able to participate in this run at all in these
In
fuel
the
cells?
fuel stocks.
Yeah, we got to ask you
Yeah.
that.
It was funny. I was listening to you and your previous guest on, and the answer is I haven't, and my inclination would be always to try and find good spots to short them.
Good for you.
But you can't get it there. That's obviously very risky and not for everybody. And I think you do it on a kind of a scalping basis. But so I was looking at what's Plug Power this morning.
Plug PLUG.
And
Yep.
just to see if I could get a borrow on it through the different platforms that I trade off of, and I couldn't. But I was inclined to try a short in the 925 area. But not that I have any insight in there, other than you look at these moves, and obviously they're highly speculative and a little bit ridiculous, and the
how would
stock's
you
going
play that?
parabolic, and
Would you do that just for like a day trade and have a metal stop in there, or is there something that you would?
yeah, probably, yeah, it would, yeah. There's no, there's no edge there. I mean, I'd be basically looking at, taking my experience in trading and, dealing with similar moves on stocks like this when they get, they kind of go a little bit parabolic and get very extended and are well above, moving averages and Bollinger Bands and whatnot. And,
Did you
they're pretty good odds that you can, fade those
did you get a
at
locate
some
on the
level.
stock? Did you get a locate on the stock?
No. I mean, no, not when I plugged them in on the platform. I mean, I guess I could call and try and get them working to get it, but it just wasn't that important.
Important, right? Save
I
yourself
wouldn't
some.
do that in any kind of large size anyway, because you could
Okay,
get really run over in it. So
right, right.
just more for fun. You sort of see it and you're like, this is silly, and you know,
Yeah,
let me
Dennis is
see what
just
happens.
pointing out that that's another reason why these runs can continue is because there's not much stock to borrow, so there's no new shorts, and the shorts that are out there are underwater. So I've noticed kind of a familiar theme here in our interview so far, and that's like you trade where you have an edge, and you had an edge in the real estate market. You translate that into profits in the equities markets, and then when you kind of just use the knowledge you had that to trade other things. So I think that's always important for our listeners to be cognizant of is that you got into the trading because you thought you had an edge from what you did in the real estate market. And I'd like to reiterate that point. So just final tips for investors here. I mean, the market just looks like it's never going to go down. Shrugging off the whole Russia Ukraine spat. The talk of the taper. I mean, I mean, as far as your long-term perspective here, you're not going to fight the tape. You're going to stay into the market here, or do you see any reasons for concern?
No, there's definitely reasons, for concern. I mean, we're at very, very extended levels. I'm treading very, I mean, I tend to run with, longs and shorts, and obviously, in an environment like we've been in the last year or so, maintaining kind of a short book can be a little bit of a drag on your overall performance. And but the market, people think it's going to go up forever. I mean, you listen to CNBC during the day; it's like a parade of like buy every dip. The market pulls back 3 points, buy every dip. If the market drops 5 points, people are screaming to taper the taper. Um, it's there's a lot of divergences when you look at stuff on a technical basis, and can it go higher? Yeah, I mean, I think where we are now has gone past virtually anybody's expectations for where the market would have gone. But I'm very cautious about where we are. And then you read some people, some other smart guys. I mean, there are a lot of hedge fund guys that are on both sides of the tape. You've got guys like David Tepper who are, seem very bullish, and then you got people like Seth Klarman who's like 50% in cash, and says things like a skeptic would have to be blind not to see bubbles inflating everywhere, junk bonds, credit quality, yields, not to mention nosebleed market valuations of fashionable companies like Netflix and Tesla.
Is there any
And
one event? Is there any one thing that would just really make you hit the panic button? Is like there any? I mean, besides like a war with Russia, is there anything from the Fed or any kind of fundamental things you're looking for that you would say, okay, enough is enough. I'm going to 75, 80% cash.
no, first of all, I don't think we'll have a situation like war with Russia. I mean, I think there's like 0% chance of that happening. But no, I mean, I could see a market pullback if it happens, sort of feeding on itself. To where I don't know, and frankly, I don't think I would go panic or go to all cash. I mean, there is stuff that I would buy cheaper, and I think I'd be insulated with some good short positions that would that would pay off quite nicely on the downside. So trying to stay engaged on that level, I just don't know, what the catalyst is going to be at this point, other than, it could be just as simple as, sort of like a technical breakdown where the market, like we almost had in February, where the market was down around 1730, and all, everybody that was bullish is like, we're going to 1700, we're going to 1650, yeah, it seems to be that's the way it works, right? When it goes in one direction, we go up forever, and when it goes in the other, we go down. We're going down further.
Oh.
So, I think you just got to be aware and be cognizant of the fact that the market's very high, and even if the market stays high, there are sectors and stocks that can pull back significantly. I mean, there are a lot of people I hear that keep saying things like valuation doesn't matter, and
but it will someday, right?
It will. Eventually it will. And I don't. Some of these stocks I don't think can sustain, trading at 25 times earnings, or
Correct.
200 or 500 PEs or no PEs or whatever it is.
Okay. All right. We've had Ross Weiner on of Gemsco Capital Management giving us his perspective on the equities as well as the real estate market. Ross, thanks a lot for coming on, and we hope we can have you on again.
Great. Thank you. Thanks for having me on.
Okay. Have a good day.
Bye.
Okay, Brentster, did you learn anything there?
Let me see. Well, between the first guess and that one, I think I might have. Yes.
Do you wanna elaborate?
I don't know if I do. No.
Okay.
I wanna just kind of keep keep anonymity today. Be a little mysterious.
Yeah, it's Monday. Everyone's a little, that daylight savings is messing.
Oh man.
My dad used to say that he didn't adjust till daylight savings until it was time to go back, till October.
I mean, I think I'm with him. Yeah. I have the same feeling. So we all got to use EDT instead of EST now, right?
Oh
Yeah, so when
yeah.
you're jotting down your times, 9 a.m. EDT, not EST,
Eastern
Eastern
Daylight
Standard Time, Eastern Daylight Time.
I don't think I write that down too much, but I will remember that next time I do that. All right, so have the analyst woke up yet here and had any ratings changes?
Yeah, they have. They have been catching up a little bit, and usually on Monday you do get a number more upgrades, downgrades. I think they do kind of catch up over the weekend. We have about 4 minutes left before the opening bell, so I'm just going to go over these really quickly. Some of the top upgrades this morning. B. Riley & Co. upgrading shares of DreamWorks Interactive from neutral to buy. Ticker there, Joel, is DWA.
DWA.
Yeah, so maybe I'll go through these, and then you can pick out a couple of highlights. We can check out some charts after I go through them. That sound
Gotcha.
good? All right, cool.
Yep.
BMO Capital upgrading shares of Archer Daniels Midland ADM to outperform this morning. Also upgrading shares of Alcatel Lucent, ticker there is ALU, to outperform. FBR Capital upgrading shares of Big Lots this morning, BIG, to outperform. Over at Wells Fargo, an analyst there upgrading shares of Edwards Life Sciences, ticker is EW, from market perform to outperform. Jefferies this morning upgrading shares of Charter Communications Charlie Hotel Tango Romeo from hold to buy. And then overseas at Nomura, upgraded shares of U.S. Steel, ticker there is just X, from neutral to buy. And William Blair this morning upgrading shares of ARM Holdings from market perform to outperform. A couple of top downgrades this morning. FBR Capital upgrading shares of Expeditors International, EXPD is the ticker there. They now rate the stock with a market perform rating, sticking on the sidelines on that one. An analyst at Oppenheimer downgrading shares of Athena Health, ATHN is the ticker, from market perform to underperform, slapping on the equivalent of a sell rating there on shares of Athena. Then we're going to get into some of the home builders here this morning. Citigroup downgrading shares of DR Horton. DHI is the ticker. They downgrade the stock from buy to neutral. And then over at Bank of America, a different analyst, different firm, downgrading two home builders this morning. KB Homes, KBH is the ticker. Downgraded a couple notches from buy to underperform. And also downgrading shares of Meritage Homes. MTH is the ticker, from neutral to underperform. And one more this morning, BB&T Capital downgrading shares of Staples from buy to hold this morning. So, Joe, which ones did you like out of that bunch there?
I was just busy writing them all down, so I
Ah.
haven't got a chance to go.
I think some of those home builders probably a good starting spot. I'm expecting those to be a little bit lower this morning on downgrades at a couple notable firms.
Yeah, actually, yeah, that's exactly what Dennis pointed out to me
Gotcha.
in the prep for the pre-market prep.
Nice.
So let's just take a look at those two issues here. A little bit of worry in the home building sector here. The numbers have been coming out okay, but
Yeah.
let's just take a look at DHI here as our systems are gearing up for the open here. Trading lower by 32 cents here. Had a gap down here. Not much pre-market trading. I just want to alert our traders here. We've hit a 23.07 so far in the session. You did have two lows at 22.95 and 22.96. So we'll just keep an eye on that $23 level. If that can hold, perhaps rally back up to yesterday's low at 23.36 or the close at 23.47. But for now, we're keeping an eye on the $23 level. KB Homes, let's check to see out how that is trading today. What two firms gave us those downgrades?
Couple of the big guns, Citigroup and Bank of America. So yeah, these ones should be moving lower this morning. They
Okay.
do carry some weight.
Once again, lower, stealthily lower open here. 1862 close, 1815 open. Got a little pop here, nowhere near yesterday's low. What we're going to have to keep an eye on here is the lows at 1815 on February 13th. Also a low at 1815 and February 5th. We're bounced off. We hit 1814. That's your level. You take that out. Perhaps I'll get more of a move on the downside here. Dennis was bringing up here that Verizon and AT&T were kind of getting whooped here in the pre-market. Verizon initiated a buyback, caused a pop-up on Friday.
I remember now.
Yeah, I see, said the blind man. And that was short-lived here. It opened lower, actually opened below yesterday's low. 46.76, providing little support here. Now popping back up. Perhaps use the close as a resistance point. AT&T after trading down in the pre-market. Let's take a look at T. This thing has just been hanging out, not really going anywhere. Looked like it had a break up above the 32.30 level on Friday. Traded up 32.59. We've come down kind of in the middle of nowhere here. 32.19 low. Made that shortly after the open, rallying back. Let's use that 32.59 as a resistance point. That was the high on Friday.
How about some of those fuel cell plays?
Oh yeah.
I feel like we gotta check those like 3-4 times per show now. This momentum.
That's like the hot, the hot thing.
Yeah.
Let's see here. Well, they in the pre-market here, we've managed to trade over the pre-market levels. Now,
Which one are you looking at right now?
I'm looking at Plug.
Okay.
Plug opened up at yesterday's high, which was 925, opened 923, had a quick sprint to 1960.
960.
Yeah, wow. 1960. People are like sold. Where was Ross? He was looking at that thing maybe in the 920, 930 area up as a potential short here. But got the quick pop off the open. We just came down and made a new low here. So establishing that low at 918, that does fill the gap from yesterday. If you're trying to play from the long side here, I don't think I'd like to see it come down and make a new low. I'd like to see it go back up to that 960 level and keep going. If it takes out that low, you had two lows from Thursday and Friday at $9 and $9.01. But boy, there's a lot of people short out there that are probably looking to bring this thing in ahead of Fuel Cell, who announces their earnings tonight, I believe.
That is right.
Yeah, tonight after the close. So that's going to be the bellwether here to see if this move continues. And that one is just punishing people. Opened up, gapped up 40 cents, 398. Snuck over the $4 level, got to 417, maintaining $4 here. Once again, if you're playing this from the long side, you would not like to see that early morning low of 392 taken out because you go down to 358 to fill the gap.
Hey Joel, we did have a price target increase on shares of Facebook this morning over at UBS. Take a look at the Facebook chart. UBS boosted the price target on Facebook from $72 to $90. Let's see. Let me see if I can dig some details out of this note really quick. It looks like UBS was citing some improved ad pricing and also a bit of traction with brands. So Facebook looks like grabbing on a little bit to a little traction here, according to UBS.
Boy, they didn't like that 2-day sell-off in the issue. Alerting our traders once again to a significant level. The all-time high, 71.97.
Wow, we are pretty close.
Yep, and you also had a 71.89 high. You're getting a lot of that very quickly off the opening print here. So keep an eye. Split those two. Call it 71.93. Up to the figure. Going up to 72. Resistance. DJ, where you been?
DJ popping in with some AMD.
Yeah,
nice.
We haven't seen DJ in a while here. Maybe he's just been quiet on the chat here, but back over $4.
Can it hold?
Can it hold? Attempting to fill the gap here. Need to go up to. I believe that was off earnings. Need to go up to 413 to fill the gap. What you're having in continuation, you had that breakout on Friday. The major resistance at the 377 level. You got a follow through. 402 was a high on Friday. You're trading above 406. I mean, DJ, this thing had I'll go with Dennis's 2-day run theory, trying to hold the $4 level. Close at 395. I'd kind of, even if it sneaks below there, I'd keep an eye on the close. 395 is a little more significant number. This thing had a bunch of really tight ranges and then broke out yesterday. So I think I'd like to see him follow through in the next 3-4 minutes here. Over the $4 level, go up and fill the gap. But that's quietly climbed its way back. I had the bad earnings, and man, they just scooped this thing up right back at the $4 level. And okay, we got about 8 minutes left, and I know Jake's not in the greatest of moods here, but
Oh man,
they're tough lot, but everybody and their brother is still picking them to win the national championships. Everybody, Skip Bayless. When I was out in Vegas, they were the third highest on the board.
I don't really understand what's with all the sentiment around them. I mean, they've been playing terribly. I mean, I think everybody just keeps thinking, hey, maybe they start getting their act together and they'll recover. I mean, they're running out of time.
Yeah.
Well, I mean, it's going to be a rough road in the Big Ten tournament. I mean, it looks like it's going to be theoretically be Iowa, Wisconsin, and Michigan would be their route if they wanted to win the Big Ten tournament. So that would be, I guess, if you can pull off those 3 wins in a row, they've definitely got my faith back. But we'll see. We'll see what they can do. That's quite a tough road there.
I would like them in my brackets if everyone else didn't like them, but the fact that everyone else likes them, it makes it a little bit hard.
We'll see. I think they'll get to maybe the Elite Eight. We'll see. I guess it depends on what the road looks like. So I think there's gonna be some weak number 1 seeds, like Wichita State.
Okay. All right. What's on the radar for
Well,
today?
I mean, obviously, I know you guys were hopping into those 3D printing names with Barron's really just going on the offensive with them. I mean, we've heard a lot of people out there doubting the 3D printing names, but I mean, they made a pretty simple case, basically saying that these companies chronically miss on earnings. They've been guiding lower, and yet the street just doesn't seem to care. Eventually, the chickens have to come home to roost. I guess that's kind of what they're saying, and looks like almost a head and shoulders pattern there. Building? I don't know.
It's not pretty here. We did come down in the pre-market under the $65 level. Made a low at 64.42 here in the regular session. Did bounce once again. 64.46 was a low on the 12th. You got the bounce there. And 10 minutes into the trading session, you need that to hold for this to shrug off that negative Barron's article.
Fair enough. Now, another couple names are moving to the downside this morning, kind of moving on analyst ratings. You had Cliffs Natural Resources moving to the downside, CLF. The report was from a firm that Axiom Capital. I haven't really followed them a ton, but they've been in Axe today in the name, and no pun intended there, the name.
Wow.
But basically, they're just saying that they think that they think in 2014 collapsing iron ore prices will really cause margins to take a hit, and they're just not really confident about where Cliffs is going. They think Cliffs is going to have to use more of its debt covenants, and that it's going to have to slash its dividend once again. And traders seem to be listening to it, really taking it down.
Yeah, gap down and continuing lower here. 1810 open, 1828. Now you've sliced down, made a 1750 low. Boy, I tell you, I need to go out. I mean, you don't want to see this chart if you're on this issue, but really not a lot in here. As we are hitting 1750 right now. Don't think we'll see it today, but you did have a double bottom in the issue back in May or actually June and July of 2013 at the 1540 to 1550 level. Still 2 sticks away from there. Also have traded a lot as far as the average daily range is concerned. So if you are playing this issue from the short side or trying to pick a bottom here, just be cognizant that this thing has already had a really big move.
Another one that's it's kind of on the rise here, and it just picked up this ticker off my list is Mattersight Corporation here, MATR, up 23% this morning. Gonna try and get you guys some news on that one real quick. Looks like news is looking pretty bare on this one. MATR is a ticker for anyone that's on their own charts
What the heck
there.
is that?
I'm gonna have to hop in. This is literally just like shot right onto my watch list here, but I think I'm gonna have to dig into this one. This is really moving to the upside. Do you see anything on the charts on this one? I mean, it's not a big company, 140 million, and I'm seeing that market cap rise as I'm sitting here. I'm 141 million now.
I don't know.
But
I mean, this thing got real. I'm not sure what the news was, but at 6:45 this morning, an odd lot traded up at 9:45.
wow.
So it was $2 higher. Come crashing down now. Boom, boom. Not a lot of real estate here until you got the gap to fill here, making new lows. Dennis is just popping in here. Something with Alcoa here. Big move for Alcoa here. That X got upgraded. So let's see what we can see in Alcoa. Off the open here, just opened lower, 1202, 1203, spiked to 1175. Just alert our traders the two lows the issues had at March 4th and 5th at 1166 and 1171 potential support points. So what else you got for me, Jake?
Yeah, Alcoa's just kind of giving up whatever its gains were from last week. So keeping an eye on that. KB Homes this morning is moving to the downside on a Raymond James downgrade to a sell rating. I think they put it. I can't remember what the price target was in that company, but one of the home builders moving to the downside there, down about 2%. Want to kind of keep an eye on some of the home builders. Keep in mind they trade as a group, so if you see one of these guys downgraded, other names like Beazer Homes, which is BZH, maybe moving to the downside. So keep an eye out for some of these guys. Do you see anything on KB Homes chart?
It was two firms that hopped on those downgrades, so kind of ganging up on it. Did make an 1802 low here in the issue. Snuck below that the double bottom they had at 1814. So shook some people out. Probably here a large bid at 18. Kind of looks like it's got a little momentum here. Maybe the rallies up to yesterday's low at 1851. Should find a mound of resistance to that area.
Well, other than that, I mean, we've got some earnings are going to be pretty quiet today, except for one name after the close, just Fuel Cell Energy. These we've had these fuel cell plays have been absolutely ridiculous. Once again, rallying this morning, going through the roof, and I'm surprised people are jumping into F Cell right now with earnings coming after the close. I'm really interested to see where this report goes because if they were to miss almost at all, I would think this is going to be just a huge downside since it's so pumped up right now. But I don't know. Joel, any thoughts here? I mean, is
Snuck
it just
over $4, got the 417, and now exactly what you think. Some people here are taking some profits. You had the 417 level, hadn't traded up in that area since October of 2009, when it made a high at 429. We are pulling back here. We did just made a low, got a nice bounce here off the 369 level. Got 11 cents from filling the gap at 358. So look for support below that 369 low to 358.
well, it is 9:45. We got the S&P trading down, Dow trading down, Nasdaq trading down, gold is down, crude is down, Euro US dollar is slightly up, as is the 10-year bond. Joel, what are you thinking on the S&Ps for today?
Kind of a tight range so far during the day session, less than 4 points. I'm just focusing on the double close area that you had. You had Thursday's close at 76 and a quarter. The all-time high closed at 1878. Little unrest of there overseas, so need to clear that 1878 level in order to sneak back into the 18 handle. If not, just looks like we could just drift down and perhaps test Friday's low at 69 and a quarter. Well, that's our show for today, folks. Thanks for the input, and we'll be back with you tomorrow.